The U.S. Department of Agriculture announced that China has officially banned the imports from 6 U.S. meat processing plants and 6 cold storage facilities beginning today. These are plants that process pork that has been raised using Paylean, a feed additive that includes ractopamine. Ractopamine will promote lean muscle growth in hogs, and China has banned that use and the import of those hogs for some time now. The new message identifies bans from Tyson food plants in Perry and Storm Lake, Iowa, along with the company's facility in Logansport, Indiana, Hormel Foods Corporation plant in Fremont, Nebraska, Triumph Foods in St. Joseph, Missouri, and Quality Pork Processors in Austin, Minnesota.
Last year, according to data from Global Trade Atlas, the U.S. exported over 312,000 tons of pork to China. It is a lot, but only a fraction of the total of 7.5 million tons exported around the world. The pork exports from the U.S. now total over $20 billion a year. As a single entity, China is by far the world's largest pork producer and consumer. To import from the U.S., China requires third-party verification that the meat is free of ractopamine. Last week, Russia slapped a one-year ban on meat, including pork, from the West in retaliation for sanctions imposed for its support of rebels in eastern Ukraine. Plants owned by Smithfield Foods, a subsidiary of Chinese pork giant WH Group and a major exporter of Paylean-free pork to China, also found themselves drawn into the Russian meat ban. Since early this year, 2 Smithfield plants have been the only U.S. slaughterhouses allowed to export pork to Russia. That market is now closed.
The Russian ban and the new bans on specific processors by China haven't affected prices of hog futures on the Chicago mercantile market. In fact, there was a 3-cent dip per pound in yesterday's trading session.